Hi everyone, today we are going to talk about General Insurance Corporation or GIC. GIC is India's largest reinsurance company. Owned by Government of India, it accounted for almost 60% of the insurance premium passed on by the insurance companies to a reinsurer in FY18. With its growing international presence, the company now is the 10th largest reinsurer in the world as per net premium basis as per Standards & Poor. While there is inherent volatility in the risk underwriting business, GIC is the only listed reinsurance company in India, making the stock worth looking at. So let's look at the key business highlights for GIC. The Indian reinsurance market, which is around 48,000 crore, has grown at compounded annual growth rate of almost 16% in the past 10 years. The most reinsurance premium return in India comes from the non-life insurance segment, and hence the growth of it is contingent on the growth of non-life insurance segment as well as the percentage of the premium which is ceded to the reinsurers. We see non-life insurance segment to grow by almost 16 to 17% over the coming years because market is grossly underpenetrated as well as there are multiple growth levers. Accordingly, there will be increase in the premium which is ceded to the reinsurance, and accordingly, CRISIL has anticipated that the reinsurance market will touch around 70,000 crores by FY 2022, which is a compounded annual growth rate of almost 11 to 14% over the next 3 years. Until recently, GIC was the only reinsurer in India. However, the recent regulatory changes have allowed the foreign players to operate in India. As of now, there are 11 companies in the reinsurance segment. In addition to GIC, there are 9 foreign players, and there is one private reinsurer that is ITI, and which was granted license in FY17 but has not begun the operations. Despite these regulatory changes, we see that GIC will continue to maintain dominant position in the Indian market, and this is primarily because the regulation guarantees minimum business to them. There are two main regulations which confers competitive advantage to GIC over other reinsurer players. The first one is that each non-life insurance company is required to cede minimum 5% of the premium on every policy they write. This guarantees minimum business to GIC. Also, the regulation requires that GIC should be given the first preference. So, if an insurer has to approach the reinsurer, it has to approach GIC first. Only if GIC refuses to accept the risk, then only the business can be given to the foreign insurers or the reinsurers. So this competitive advantage overall has resulted in the good financial performance of GIC. In the last 2 financial years, that is in between FY16 and FY18, the insurance premium of GIC increased by almost 71% compounded annual growth rate, driven mainly by the crop insurance because of the introduction of Pradhan Mantri Fasal Bima Yojana. The premium growth has moderated in the current financial year, that is in the first 9 months of FY19. However, it is going to remain healthy in double digit going forward, driven by the international operations. Despite healthy growth in the premium, the company reports underwriting losses, and its combined ratio was at around 107% for the first 9 months of FY19. Despite the underwriting losses, it was able to report a good profit, and that was mainly because of the investment income, which was more than sufficient to cover for the underwriting loss. So what's the outlook on the stock? GIC is well poised for future growth as it continues to improve on its operating efficiency, focus on profitable segments, and with the increase in the insurance penetration. Though we are very comfortable with GIC in the long run, in the short term, the stock performance will continue to track the underwriting performance and could be very volatile. The stock has already corrected more than 30% from its 52-week high. Currently, it is trading at less than 2 times its trailing book. The valuations looks very reasonable given that ROE is between, that is return on equity is between around 12 to 15%. For a long-term investor who wants to participate in the growth of the reinsurance sector in India, the stock is worth looking at. That's it from our side. For more views and updates, log on to moneycontrol.com.